Get ready, because in the world of electric cars, where everything happens so quickly, fortunes can change in the blink of an eye. Have you prepared yourself? Today, we're going to delve into the high-stakes drama that surrounds the electric car manufacturer that is most likely to declare bankruptcy this year. However, the question that is worth $1 million is as follows: which corporations on the verge of going bankrupt? And what are the causes that are contributing to this precarious situation? As we find the reality that lies beneath the headlines, we invite you to join us as we unravel the twists and turns of this fascinating situation. Is it possible for you to uncover the alarming revelations and speculate on the future of the most vulnerable player in the electric car industry? The electric vehicle and battery sector is confronted with a tough terrain that is characterized by a rising number of bankruptcies. This is despite the fact that the industry is experiencing tremendous growth and plays a crucial role in the worldwide transition to sustainable transportation. These developments bring up significant concerns over the long-term viability of the sector, as well as the challenges that it must surmount. The capital-intensive nature of the electric vehicle and battery industries is one of the key challenges that these companies must overcome. It is necessary to make a substantial initial investment in research and development, manufacturing infrastructure, and the formation of supply chain in order to design, produce, and distribute electric vehicles and batteries. It is possible for this high cost of entry and operation to put a burden on the financial resources of businesses, particularly those who are just starting out or do not have strong backing. The industry is also struggling with supply chain disruptions, which are made worse by global events like as the COVID-19 epidemic and geopolitical conflicts. These interruptions have resulted in shortages of essential raw materials such as lithium, cobalt, and nickel, as well as an increase in how much these commodities cost. Simultaneously, the electric vehicle and battery industries are seeing a tremendous and unrelenting pace of technological progress. It is essential for businesses to make consistent investments in research and development in order to maintain their competitive edge. This dynamic has the potential to be a double-edged sword. Although there's a driving force behind growth, it also means that businesses have the potential to rapidly fall behind if they are unable to keep up with technical advancements or if they fail to accomplish breakthroughs that were anticipated. Additionally, the entry of traditional automotive companies into the electric vehicle area is intensifying competition in a market field that is becoming increasingly saturated on a daily basis. Companies may experience increased financial strain as a result of this increased rivalry, which can potentially tighten margins. It's possible that success doesn't run in a straight line, but it does have to take a breather every once in a while. The electric vehicle industry has been experiencing some issues as of late due to the fact that sales have slowed down and various businesses have reduced their manufacturing goals. The current circumstance is especially challenging for electric vehicle companies like Lordstown Motors, which filed for Chapter 11 bankruptcy in July 2023 in order to restructure its business and sell its assets. On the 5th of March, the debtor was successful in obtaining confirmation of its Chapter 11 plan and was prepared to emerge from bankruptcy. Fisker is yet another electric vehicle manufacturer that has been left with little choice but to make some difficult choices, the most recent of which was to halt production of its automobiles for a period of 6 weeks commencing on March 18. In a statement with the Securities and Exchange Commission on March 1, the firm that was created by Henrik Fisker, a Danish automobile designer and entrepreneur, stated that it would be late in publishing its 10K annual report for the year that will finish on December 31, 2023. The company is situated in Manhattan Beach, California. Fisker, a manufacturer of electric vehicles, is taking significant actions in order to maintain its business operations. Fisker stated the company had experienced a change in key accounting people and that it required additional specialists who possessed accounting expertise, training, and experience in order to finish the report, which was due on February 29 by the deadline. Later on, Floris Buding, who had been appointed Chief Accounting Officer at the beginning of November, resigned from his position at the automobile manufacturer. New price targets for NVIDIA have been revealed by analysts in advance of the Iowa Stock Conference. John C. Finucane IV, who had been employed by the company for around 3 years, left in late October to seek a position with another company. His departure came following the departure of John C. Finucane IV. The role was taken over by Angel Salinas in the beginning of January. As Fisker approaches the second year of production of the Fisker Ocean, the company announced that it has discovered significant flaws in its revenue and the balance sheet accounts that are associated to it. Additionally, the company anticipated that its capital expenditures and working capital requirements will reduce in 2024 and beyond. In the most recent quarter, the company recorded a loss of $1.23 per share, which is significantly more than the average estimate of 22 cents per share from FactSet and the loss of 54 cents per share from the previous year. In comparison to the previous year's total of $306 million, Revenue came in at $200.1 million, which is lower than the forecast of $327.7 million provided by FactSet. When asked by analysts, Chief Financial Officer Gigafactories stated, "There is substantial doubt about our ability to continue the going concern when we file our 10-K with the SEC." She concluded by saying, 2023 was a much more challenging year than we anticipated. According to the transcript of the call, Gigafactories stated, "However, I can assure you that everyone at Fisker is working extremely hard around the clock." The call was recorded. Head of the company, "We are in this for the long haul." As part of its transition to its dealer partner model in 2024, the electric vehicle manufacturer said that it would be laying off approximately 15% of its workers. Gigafactories admitted that the success of the company's business plan is greatly contingent on the smooth transition and implementation of the new dealer partner model, which is switching from selling directly to customers to selling to dealers. Additional automobiles. "We recognize that success is not a straight line," CEO Henrik Fisker said to analysts that the company is aware of. "We are introducing to the world the electric vehicle that is the most environmentally friendly. We were aware that this would be challenging, but we are committed to this endeavor for the long haul and are certain of the path that we will take." Fisker also stated that the firm feels the Ocean platform is priced competitively and has various characteristics that are leading the way in its class, such as a range that is the best in its class, which is 360 miles. However, the company also acknowledged that the electric vehicle sector is currently experiencing a phase that is both volatile and uncertain. Additionally, Fisker said that it had acquired a finance commitment from an existing investor in the amount of up to $150 million. This took place in addition to the suspension of production. In addition, the company has acknowledged that it is currently in discussions with a large automaker over the possibility of the latter investing in the company, jointly developing one or more electric vehicle platforms and manufacturing a product in North America. It has been reported by Reuters that the firm in question is Nissan. The news agency stated that the transaction has the potential to provide the Japanese automobile manufacturer with access to an electric pickup truck, while also providing the struggling startup with a financial bailout. According to Reuters, which received its information from an unknown source, the terms that are currently being discussed include Nissan investing more than $400 million in Fisker's truck platform and constructing Fisker's projected Alaska pickup beginning in 2026 at one of its assembly factories in the United States. Nissan would construct its very own electric pickup truck based on the same chassis. Both Mississippi and Tennessee are home to Nissan assembly factories in the United States. A representative from Fisker stated that the company does not comment on rumors or speculation. There is one thing that is certain as we come to the end of this enthralling narrative. The electric car business is a dynamic terrain that is full of twists and turns. If you subscribe to receive further information and insights, you will be able to keep your finger on the pulse of the industry. Watch this space, and until we meet again, stay tuned and energized.